What's going on, people? It's your man Joshua Pondexter coming at you live via no, Facebook this morning. I am YouTube and LinkedIn, right? So, um, today's topic is which business entity is best for you, right? So, I tell you, we've been doing this business consulting for a while, a couple of decades, and when they fail, DIY is killing people, right? Do it yourself. I'm gonna set up my own business, or they go into legal Zoom, right? Legal Zoom is only giving you paperwork, no understanding of what's best for you, how to structure your business, things of that nature. So, uh, consistently, I had met one person. I might have met one, but not many. Let's say out of the thousands of people who have already set their business up or had someone else set their business up, they still didn't have it compliant, they didn't have it credible, and they didn't have it fundable, right? So uh, I'm going to be harping on this topic until uh, I stop, which will be never. Robert Kiyosaki had it right when he said, mind your own business. The environment that we're living in is proving that to us, that you should be, if you work for a company, that you should have an ability to make some income on the side. They call it a side hustle, a part time business, whatever you want to call it. You should be having the ability to make some money on the side. Well, I work for this corporation. They paying me six figures. I got an expense account. I got freedom. Yeah, until you don't have it, right? So you need to get your own business, right? Get your own side hustle. People say, well, you need seven uh, streams of income. Well, I don't know about that. I would say one good healthy stream will do, right? So if you made $100,000 from one stream and you lived on $30,000 a year and saved the rest, paid the taxes, hey, you can do all right, right? So anyway, without further ado, we're going to get into this thing. Business entity might be a little technical, but we're going to try to keep it as light as possible and give you as much value as we can uh, in this little short period of time. So, which business entity is best for you? It's been brought to you by Joshua University. All right. So this is the sponsor. Okay. What is a business entity? Okay. A business entity is a commercial, corporate, or other institutions that is formed and administrated as per commercial law in order to engage in business activities, usually for the sale of products or services, right? So you may be selling products or services, and you may say, I'm doing business, but you're not a business. You're not a business entity. Essentially, an entity is what allows a company the ability by law to conduct business, right? So if you're not structured and you're conducting business, it's a lot of ramifications to you personally, right? So, business entity should be chosen with care, right? Just don't go willy nilly to the Secretary of State, set up your C corporation, S corporation, uh, LLC. It should be with some care and some forethought. Read a book, watch some YouTube videos, something, and see what resonate with you, or contact a business consultant, right? But can also provide benefits, right? Your business entity can provide benefits to you, right? And you can have 401ks, you can have reimbursement programs for medical, You can have expense accounts, right? So it can provide some benefits to you. Yet they can even save you money if chosen well, right? So for the tax strategy, right? So that's why you want to choose your entity well because of the tax consequences. Why not every business entity will do? Every business entity will not do, right? Your business entity matters, right? So what you're going to choose, it matters. It has to do with money in both the present and the future. But so this is why it matter. Why should I select the best entity? Because not only I'm thinking about today, thinking about what type of business am I going to build? Am I just going to remain a small consulting type firm, or am I going to build uh, a, a business with employees and stuff like that? So I got to think about that when I choose my entity. And you want to keep more of yours, right? More of your money, So want to keep more of your money. Don't have all your money going in taxes and fees and things of that nature. So that really matters. Business entity, recognized business entity. You got the LLC, the limited liability company. You have a partnership, corporation, S corporation. So uh, the regular standard corporation is called a C corporation, and then you can change the how it's taxed with the Internal Revenue Service and make it a S corporation, right? Some people say that S stands for small. You got a small mind, right? We don't want to have a small mind when we go into business. Okay, business entities and their taxes. LLC. An LLC is not a separate entity according to the IRS, right? So it's not a separate entity. So it isn't taxed. So that means your LLC is not taxed, right? That's a good thing, right? Because you won't get double taxation. Instead, its members pay individual taxes. Members of an LLC pay employment tax on the entire net income of the business. So this was called self-employment tax, right? A lot of people think that that's a big deal. Yes and no, right? Just depends on your tax strategy. Partnerships. A partnership does not have to pay income tax, right? Either that entity. Instead, the business will pass through its profits or losses straight to the partners. Then the partners will include that respective share of the partnership income um, or losses on their personal taxes, right? So the same way, it's a pass-through entity. All the profits and all the losses can get passed through to the owners, which is a good thing because when you start up a business in the beginning, you have more expenses, losses, than profits, right? And so then you can pass those losses down through the members or the partners so that they can offset other incomes that they have, right? So you married, your spouse bringing in income, hey, you can reduce your tax liability there. So it's a good thing. So in the beginning, this type of structure is very favorable. Corporations. Corporations have to pay state and federal taxes. They sometimes also pay local taxes. So, taxes is a big deal. This will include paying income taxes on profits, the opposite of partnerships and sole proprietorships. Corporations can end up paying taxes twice. First, when it makes a profit, and the second time when dividends go to the shareholders. So that is one of the reasons people say, well, no, I want to see corporation or a regular corporation because I'm going to pay double taxation. I don't know why is it that we hear about all these corporations that pay zero in taxes. So if you weren't about double taxation in your corporation, you have the wrong tax advisor. All right. That's the problem. Amazon ain't paying no taxes. IBM's not paying any taxes. Something's going on if you're concerned about running up against double taxation in your corporation. So check who you're dealing with. S corporation. Only the wages of any corporation shareholders, also and employees, will be subject to income tax. Any remaining income is paid to the owners as a distribution. Distributions are taxed at a lower tax rate, if all. So yeah, that's a little tax lowering strategy, right? Is it soundproof? Is it the best? I don't know. You need to talk to your advisors about that, because one of the things about income that comes to you as distribution, which, yes, it's not taxed at ordinary income tax, which could be a nominal 33%. It could be taxed at the lower dividend rate, which is 20%. That seems like a big drop, right? But here's the gotcha, is that when you take dividends, right, that amount cannot be calculated into contributing to your 401k. It cannot be calculated in contributing into buying a house. So say, for instance, you get $100,000 of income from your S corporation. You take 60 as salary. You take 40 as dividend. Yes, you have saved on some taxes, but when you go buy a house, you get credit for the $60,000, the salary, not the dividends, right? You get ready to contribute to your retirement program. You can only contribute based on the 60. So there's some things that to look out for, no matter what structure that you use. This is just my personal opinion. I think it was the 1997 tax code, because major tax code had only been changed 3 years. The last was in 2017. Then it was before that, and then 1987. So all of the benefits, the tax benefit for the S corporation, was pretty much killed in 1997, right? So check the people who are advising you, right? All right, legal liability, big deal, right? Because we live in a litigious society. People will sue you frivolously, right? And if you don't answer their frivolous lawsuit, they will get a default judgment against you, right? This is ridiculous. So LLC members are protected from personal liabilities for the business decisions or actions of the LLC. So if you are an LLC, if you are a C corporation, S corporation, any type of corporation, any business that you do, you better do it from your business, right? When you sign contracts, it better be president and CEO of said business, right? Don't put it in your personal name. When you utility bills, all these things, right? Because when you put it in your personal name, you can definitely be liable, right? So if the LLC incurred debts or is sued, the member's personal assets are usually exempt, but not always, hence the term limited liability. So this is why you must be compliant, that you must keep your corporate veil with the LLC protected at all times, and that's you operate as a business. I know you want to take the short road and go, okay, cool, let me just sign my name. No, that's personal, right? You need to sign as an officer of your company in all contractual agreements, right? Partnerships retain full shared reliabilities. Therefore, partners are not only liable for their own actions, they are also liable for any business debts and decisions made by other partners. Plus, all partners' personal assets can be seized to satisfy partnership debt. Partnerships, not really a good asset protection strategy, right? Sound like a marriage. So you don't want to be married to someone in a business, right? So not a good idea. Partnerships, and you see those disappearing all the time. Corporation. Within a corporation, the shareholder personal assets are protected. Shareholders can usually only be held accountable for their investment in the stock of the company. However, if an employee commits fraud or uh, felony under the corporation direction, who would do that? So, well, they do. The corporate veil can be pierced and personal assets can be on the line. The obvious solution: don't tell your employees to commit fraud or felony. So they will, don't worry about that. Go ahead and do it, right? It's not right. Well, the employee know it's not right, but the boss is like, oh, hey, don't worry about it. Go ahead and do it. I'm approving you. Yeah, no, you're not, right? This corporation shareholders' personal assets, like personal bank accounts, can be seized for the purpose of satisfying any business liabilities, like verdicts against the companies, right? So there's some legal liabilities when you set up a company, right? So this is very important to think about, right? Well, I'm cutting hair as a barber. So what's your liability? Well, it's a $40 haircut. No, well, it might turn into more than that if you put some ringworm in a guy's hair and he gets sick or whatever. So the liability is all about protection. So even though you're a barber, a beautician, solo person, you might want to consider putting yourself in a legal structure, right, to avoid any complications. The costs and shares, right? An LLC is another type of corporation, and the only real difference in liability rather than the shares and the cost, so it works like other corporations, right? So the shares, and let's talk about the shares, right? How much shares do I own of the corporation, right? So I'm a single member LLC. I own 100% of the shares, right? So that's it. And if I had other partners, I could give them percentage of my share. Partnerships varies, and they should be clearly spelled out in the partnership agreement. If the shares are not specific, they are assumed to be equal, right? So you have a partnership, you need a partnership agreement, right? Who's going to be responsible for what? What's your ownership? All these things need to be clearly spelled out with partnership. You can already see that we don't really think that a partnership is a great idea, right? Don't be responsible for somebody else's bad decision. Cost and share. Corporation. A corporation is run by the board of directors. These people are usually also the owners. Ownership stakes are defined by what percentage of stock everyone owns. If one person has a controlling interest of 50% of the stock, then their decision will generally outrule everyone else. If the shareholders have smaller stakes in the corporation, sometimes shareholders will band together to influence decisions, even eject board members. Profits are generally distributed per share percentage, although the board members can take a salary, right? So with the profits, you can take a salary. It's all about the profit. This corporation and shareholders working for the company must pay him or herself reasonable compensation. The shareholder has to get fair marketing values, or the IRS may reclassify an additional corporate earnings as wages, right? So you don't want them to turn into wages because that's higher taxes, right? So understand that if you're a shareholder, right, in an S corporation, and you say, well, hey, I'm the CEO, and my company is a small consulting company. I make $500,000 a year, and you want to try to pay yourself 50. That's not reasonable, right? That's not reasonable. So all these rules got to be followed. When is a partnership best? Partnerships share the spoils and the responsibility. Sounds good. The size of the shares dictate how much they have. Silent partners generally want to throw in their money and take out their profits and not make much else. So I have been a silent partner, or I put in some money into some companies, and still not a good idea, because if it's a smart person, they can start using all expenses to pay for their BMWs, pay for all these different things, and then the gross profits will be small. Right. When is a partnership best? When is it? Partnership carries a measure of risk. Partnerships are responsible for their own and other partners doing. Don't sound like that will ever be best. It's imperative that partners be trustworthy and responsible. Hmm. Well, I am not a mind reader. I know that when we started this partnership together, everything was wonderful, everything was good, but I don't know how you're gonna turn out. Partners also need a plan in the event that one of them dies, because if I'm in a partnership with someone and they die, I'm then go into business with a spouse, right? So we need um, an exit plan, an exit strategy when you die, right? I need to have the right of first refusal so I can buy that person out of the business, give them some cash and let them go their way. All right. When is the corporation best? Corporations are lower risk and usually, and then one of the reasons legally that the corporation is a lower risk because it's the oldest structure and it has more test case of how it's been tried and how it's won and how it's held as corporate bail. Business profits goes on business tax return and not the owner. Corporations are independent entities, so they can be held liable in court for negligence or been negligent, right? So they're corporations are people too. So that's a good thing. Live as a company. I live as a company. Joshua Pondexter don't exist, right? So um, there's some benefits to that, specifically tax benefits, right? So if you paying too much money in taxes, holler at your boy. I'm going to show you how to reduce that in one of these entities. Within the corporation best, the number of shares will dictate how much own power owner has. Owners with over 50% of the shares aren't always invincible. Smaller shareholders can band together and become voting blocks and influence the company direction better than if they acted alone, right? So is it really important that I own uh, the majority shares in the company, right? I think it's estimated that uh, Jeff Bezos only owned 30% of shares of Amazon, right? Come on, man. And he's making billions upon billions, right? So is it better to own 100% of $100,000 a year earning company or 30% of a $10 million earning company, right? So sometimes getting the corporations and getting with other like-minded people, you can do more, right? You can do more. Okay. The S corporation, when is it best? Uh, Never. All right. The S corporation will carry lower risk, but business profits will be reported on the owner's personal tax return. However, the owner can save on Social Security and Medicare taxes. Yeah, yeah, you can do that. S corporation owners are protected from personal liabilities for its business decisions or actions. So let's look at this. The owners can save on Social Security and Medicare taxes, right? So a lot of people don't want to pay those things, right? The self-employment tax come out of there. Well, I'm gonna tell you, the social insurance, Social Security and Medicare, a lot of people gonna need it. You're gonna need it. You might as well pay into it because you're not saving any money anywhere else. So you're going to need it. I'm telling you, dealing with the last 2 decades with retirees and seeing those who retire well and those who didn't, I'm telling you, don't make this a big deal, right? Don't think that Social Security will not be there because all government programs, what they do, if they have a shortfall in the money, what do they do? What did the government do? They increased the debt ceiling, right? They That's what they do, right? They borrow money. You see? So, bam, don't let that be a big deal. I'm trying to tell you. 65, 70. A lot of people doing bad because they don't have that Social Security check coming in, right? They wish they had it. So don't make that a choice where you're getting an S corporation, right? I believe in paying into the social insurance, Medicaid, Social Security. Just my personal belief, because I have seen and look around in your family and in your neighborhood and talk to some seniors, right? And see that a lot of them, if it wasn't for Social Security, would be doing really, really bad, really, really bad, right? We're still talking about the S corporation, right? So S corporations are limited to only 100 shareholders. And I like to see corporations, right? Those shareholders have to be individuals or certain trusts and estates, right? So that's the beautiful thing about S corporation. You can run your business through the trust, right? So if you got a trust, you want to run a business through it, it's best to have an S corporation. Foreign citizens cannot be shareholders in an S corporation, right? So if you're a foreign citizen and you're working in America, got business in America, you can't have an S corporation. The company has to operate domestically, right? Your S corporation. Won't be no international conglomerate, right? I know all you're talking about. I'm international. I'm taking my game internationally. Not happening. You've been winning the S corporation best. Y'all let me know. All right. The owner will pay taxes only on the money they earn from the business. Okay. This is recorded as personal income. It's a pass-through corporation like an LLC. So, if I set up LLC, why need I want an S corporation? All right. The business itself is not taxed, just like an LLC, right? Owners of an S corporation who are also employees pay taxes based upon that compensation. All right. I'm an employee of my S corporation. This means they don't pay Social Security and Medicare twice, like owners of an unincorporated business have to, right? So self-employment, right? So self-employment taxes, the entity pays 7.5% and the person pays 7.5%, right? That's 15%. Wow, that would be a lot if it was true, right? But you get an automatic deduction of 7.5%. So right on your 1040, right? And so it adds up to 7.5% that you pay for Social Security and Medicare, right? So that 15% is an illusion. Okay, once again, who you're talking to about your tax strategy? I'll let your boy. All right, when is the LLC best? Every time it is best. Good morning. Thank you for this information. To convert from one entity to another, for example, S corporation to a corporation if your company grows. Oh, great question. Great question, Ms. Boone. Yeah, you can do those. You can do those conversions, and so I'm just going to put a pin in that thought and give you the answer. This is why I consider the LLC. I'm bullish on the LLC because what you can do, you have a pass-through corporation when you start the LLC, right? And then at any time in the future with the LLC, you can convert it to a S corporation or C corporation, depending on your growth. That's why I recommend all of my clients start with an LLC, right? I kind of killed Hamlet in the first act, right? But since you asked the question, I had to go there. But to your answer, yes. You would, whatever state you're in, I'm in the state of Illinois, you would contact the state, right? Let them know you want to convert it, and then your tax treatment. There's all type of forms to fill out, and then you might find that it might be a lot easier to start all over, depending on where you're at in your business, right? JoshuaPondexter.com. Ms. Boone, avail yourself of a consultation, and we can dive deep into that thought, find out where you are and how to proceed from there, right? A limited liability corporation carries lower risk. The business profits are reported on the personal income taxes. This can result in owners paying higher taxes. It can, right? But okay, Illinois. But they also pay an unemployment tax on the net income of the business, right? So those are caveats, those are warnings. There's nothing that you cannot create a legal, ethical, and moral strategy to not have that happen to you, right? Self-employment deductions are too immense. There are too many of them to give them away. Worrying about self-employment tax. There's a medical reimbursement plan 150 that can save people tens of thousands of dollars a year if you have a family and children, and on the medical reimbursement, the things that you can deduct, in an LLC or in a sole proprietorship, far outweighs these little issues here that we can work around, right? And that is the potential of paying higher taxes or the self-employment tax. Where I tell you that's right there is a misnomer, because 15 is not really 15%, because you get an automatic 7.5% deduction right there on your form, so you're only paying 7.5%. And if you make $200,000 of income in your business, and then your expenses only leaves taxable 20 grand, who cares? All right, okay, let's move on. All right, an LLC isn't a separate entity per the IRS. As far the IRS is concerned, it is not a separate entity, but that's not true. In the state level, you have an LLC, which is for giving you legal liability protection. But the IRS, when it comes to taxes, they're going to look past the entity and look directly to you for, tax responsibility. Yet LLC members are protected from personal liabilities from its business decisions and action. Oh, that's what we just said, right? Because you're operating in a state and you're operating in the whole federal government system. If an LLC go into debt or sue, the members' personal assets are usually exempt unless they did something illegal, right? LLC is often used by groups of professionals like doctors, practices, and law firms. That used to be the deal, but everybody are using LLC. But when you look at large corporations that have an LLC, go like, wow, that company makes 20, 30 million dollars a year, but they still in the LLC. Why is that? Well, that's just their state covering, right? But with the IRS, they can change their tax reality to S corporation, C corporation, depending on how best it fits that company, right? So if you got a lot of employees, you want to be a C corporation. If you just got a few employees and you're making a whole bunch of money, say you got 10 employees and you're making 30 grand, you might not need to go to, you might want to stay in the S. So it just depends on what's going on with the size of your entity. All right, the recap, which business entity is best for you. Business entity makes a difference in taxes, liabilities, costs, and shares, right? And administrating them, right? The C corporation is very complex, right? that you are required to hold annual meetings, right? The LLC is suggested that you have annual meetings, and I think that you should keep that suggestion, right? Choose the best business entity means choosing the best business entity means considering what would happen if the company is sued, right? So your liability. So let's look at that, right? So the corporation has a corporate veil, right? The LLC has a corporate veil, but the LLC has something different from the corporation, right? It has charging orders, right? So the corporate veil and charging. So it has what I call redundant assets protection, right? So the corporate veil protect you from business activities that you do within your business. The charging orders, if you get sued for some personal activities, protect you from them people making a run on your company. So you got $1 million lawsuits right now, trying to make a run to get all your equipment in your company. No, the charging order kicks in. No, you can't do that. The only thing you're able to do is get maybe a lien against my income, right? And then I could play with that. All right, being comfortable with who is an owner and the ownership structure. So that's that's what you're looking at, right? Who am I going into business with? Who are the other owners, right? Do I need to protect myself from them? Decide how hands-on the owner you want to be, right? You just might want to be an investor, right? So those are the type of things that you're going to consider when choosing your entity. Once again, we're Stone Consultant LLC. We're a business advisory company and asset protection. We're in that space, right? Joshua Pondexter. I'm the president and CEO. JoshuaPondexter.com is my website. Email JoshuaPondexter@gmail.com. Holla at your boy. Let's choose the best entity for you, for your family, and for your business, right? Very, very critical, right? So I think we've been on here enough. We've been here almost 40 minutes, right? Corporations, LLCs, partnership. Wants some detail dive about your personal situation, go to JoshuaPondexter.com. Schedule a consultation for business planning. We do retirement planning, estate planning. So whatever your need is, go ahead and go to the website. But in the meantime, in between time, we beseech you, because we're trying to grow this channel, that you will hit the like button or the dislike button, that you would subscribe, that you would share, you would comment, and that you would hit that notification button when we go live or upload videos of that nature. It's all about business. This is the content that we're trying to do. Not very popular, because we're not talking about relationship topic, but we're going to talk about your relationship with money. Oh, that's a good one. Let's talk about the psychology of money. I'm going to talk about that Friday morning. We're going to talk about relationships. That's the relationship that you should get right with your money. Once again, Joshua Pondexter, JoshuaPondexter.com. I'll let your boy. And always important, we wish you peace, love, and soul. Bye for now.